What's going on, people? David here. Welcome to my channel. This video I'm going to be back testing gold, which is I think it's a forex pair. Gold is forex. It's a metal, whatever. I'm going to be back testing gold, and the reason why I'm doing this is to make sure that I'm well prepared for next year. This year wasn't the best year in my forex trading career, and I want to make sure that some mistakes that I made this year that I don't want to make next year. And for me to be able to avoid those mistakes, I have to backtest the strategy, know how often it wins, know the possible losing streak, the possible winning streaks, and also backtesting the strategy is going to build my confidence level to make sure I know what I'm in for, and I'm not trading from an emotional perspective but rather from a neutral perspective. Then I do have a trading strategy and I believe it's a winning strategy, but because I've never taken time out to actually backtest it, I haven't developed enough confidence level in this strategy. Sometimes I doubt myself trading this particular strategy, and when you doubt yourself, you can relate what I'm talking about. When you doubt your strategy, you make wrong decisions, especially when a trade is running. Literally, you're not thinking logically, and you make impulsive decisions that can actually take you downhill from there, and you have to work much harder to build back your funds. What's going on, guys? So this is the plan that I want to use to backtest my strategy. As you can see, I'm going to be trading gold, USD CHF, and CAD JPY, but for this specific video I will be analyzing gold from January 2020 to December 2020 to see how the market has performed. And you can see the strategy I will be using. I'll be trading breakouts and retest, trend continuation, and bounce from supply, from resistance and support. So these are the entries that I will be using. I will be looking for demand and supply on the lower time frames to get a perfect entry. And before I get in, I will look for MSB, which is market structure break, and a return to origin. And of course, the minimum risk to reward will be 1 to 3 to have a better outcome. And these are the objectives. I'm pretty sure I've mentioned some of it, but number one is to know if the strategy actually works at least 60% of the time. I'm looking to make sure I have a strategy that wins 60% of the time, so that my profitability at the end of every month can be very nice and rewarding. And the second one is to know when to trade and when to wait. Sometimes traders don't know when to actually chill and wait for the market to commit to you before you commit to it. So there are times you just have to wait for that high probability setup to come, and then you trade. And the third one is to find the best possible entries. I know not all entries are perfect, but some entries are really good, and when you see it, you just know. And the fourth one is to have the highest and unwavering confidence level. The main reason I'm actually doing this is to have a very strong confidence in my trading, that no one can tell me or to change my mind on what I want to do. So this is why backtesting is very important. And lastly, to know when to change buyers if your price action should change. So let's say you're selling a pair and price action changes on you. Sometimes you might have to change your mind and then buy depending on what the market is actually presenting to you. So you don't really decide what's going to happen. The market does that for you, and you act accordingly. And of course, after this backtesting, I'm gonna have an assessment, which is what I've discovered in the market, what I've learned, and then I will make a plan to how I want to approach the market in the upcoming year. So stay tuned. All right, let's get into the chart. As you can see, I have gold on my trading view platform. So let's by the way, the video is pre-recorded, so this is just an audio over it explaining to you what I'm doing. So I like to start from January 2020, and then I will trade my way forward to test my strategy to see if it actually works and how I'm gonna be trading it for 2021. So as you can see, I'm looking for January 2020. So for this video, January wasn't really the best month, as you can see. So for this, I would just because I didn't like the way the year started. For this, looks like the year started with a very big big gap, so I don't want to trade yet. In this kind of situation, I would just wait for more days, for more daily candles to form before I actually think of trading. So as you can see, I wrote probably market weekend market gap, but in this situation, I think it was the entire end of the year towards the new year. So I think actually started this trade in February. So yes, my analysis started in February. So the first thing I look for is support and resistance, and as you can see here, I like to draw across the weeks because the most activity is happening in the body of the candles. So I draw my support and resistance, at the top, mostly across the week. As you can see, my support there is drawn across the week. So, and after doing that, I will go down to a lower time frame to see if there's a possible entry in the market. So I have my support and resistance. I don't like to draw. I just draw maybe one or two, actually two or three. Now I'm looking for the market to present an entry opportunity for me. So far, I don't know if I'm going to be buying or selling, but at this point, I'm considering actually buying because of what is currently going on. There we have previous market structure has been broken. As you can see, it was a downtrend, and now the previous lower high was broken, and it forms a new demand zone, which I'm actually drawing right now. So what I would do in this kind of scenario is wait for market to come back into the demand zone, and then that would be my entry, and I'll put my stop loss a little bit under the zone, and I would enter. But in some cases, price doesn't always come down. Price might use uh something I call a price cap, which I'm gonna draw for you in a little bit. So normally price, sometimes it returns to that demand zone before it actually shoots up. But in this case, it's not returning all the way down. It's leaving some liquidity in the market. So now I'm drawing a zone called the price cap, which was the previous lower high. I'm drawing a zone, and then that is where I want to enter, because now I've already made up my mind that okay, I don't think the price is going all the way down to my demand zone, so this will be my entry point. Even though it already presented an earlier entry in that same zone, I missed that one, and it came back to it the second and the third time, and during that third time of coming back into the zone, it's a perfect time to enter. So that would have been my entry point. I would have actually entered and put my stop loss right underneath that zone, as I'm doing right now. So this specific zone, like I said, I call it a price cap. It was used as a supply, and now it's being used as a demand. Some people call it a resistance, a break and break and retest of resistance on a lower time frame. Now this is a trade going on. It's already in profit, and at this point I'll be looking to just break even my position. And so far the trade is going good. That would have been my first trade for the year. And during while your trade is going on, it's always important to look for opportunity to enter again and add more positions, because the trade is going in your favor. Why not add more positions so you can actually maximize your profit for that specific trade? So that new zone that I drew would have been my second point of entry. I would have waited for price to come back into it and enter again, but in this case price did not come back into that zone, so I wasn't able to get a new entry. So it was just one trade. I think this was 127 risk to reward. I will see that in a second. So this is me just explaining what I expected to happen that did not happen. So market did not return to origin, which was my demand zone. And I'm gonna leave another note here to explain what exactly I did. So market used the price cap. So this was what the market used, and that would have been my entry because market didn't look like it was going to return all the way back. So there were one, two, three opportunities to enter. Sometimes the market will beg you to enter a trade. Over here, as you can see, the market presented an opportunity three different times. The first opportunity I wouldn't have gotten in because I would wait. I would think it was going all the way down, but um, the second time it comes back into the zone, I will be looking for an entry. But in this case, I got in on the third time, which is kind of risky because the market could have just left you. So this trade was a 1 to 6 risk to reward. If I had risked 2%, my reward would have been 12%. And I had this trade. I would have had this trade for like 7 days. So now, since the resistance at the top at 1592 was broken, I'll be looking for a retest and a continuation. So my next level will be at the top of that week, and that will be my next profit target. So right now I'm looking for another buy. I would really love price to come back into this demand zone that I just drew at 1592 price level. So I would like price to retrace back into it and then look for another opportunity to buy it. So is price gonna come back? Doesn't look like it did. Actually, at this point, it formed another demand zone. As you can see, that little accumulation over there, that's another zone. So that would have been my entry because it pushed above it, broke structure, and came back into it. That would have been an entry, even though the risk to reward is very small. I will still take this trade because it's signature. Sometimes you just don't want to miss out, and if the market gives you a little bit of opportunity, you take it. You don't know when the next one will come. So profit smash. That was, I think that was 1 to 1.3 risk to reward, and it would have given you like 2.3% or something like that, 2.6%. So it wasn't a big risk to reward, like I said there, but it was a good high probability trade. So risk to reward was 1 to 1.4, and I think the percentage wise, I just gained 2.8%. So far the back testing, obviously the strategy works, and so far it's doing okay. So at this point, there's a lot of drawings on the chart, so I would like to start afresh just to find another trade. So I'll drop down to the daily, and in this case, because right now the market is very bullish, and I don't know where my next target would be. As you can see, I'm on the daily time frame. This kind of situation, I will go back to the weekly time frame just to look for another eye, so I can determine what my next target would be. As you can see here, I've already dropped down to the weekly time frame, and just to look for what my next target would be to draw the next resistance. So so I'm going to draw my next resistance at 1689, and then drop back to the lower time frames to look for another entry. So in this point, there's a break of resistance, and what I will look for is a return to origin, which is a new demand zone that I'm going to draw a box across right now. There we go. That's my new demand. At this point, I would have gotten in right when that candle wicks down, because it did not really touch enter the zone, but it's a sign that that it already tested the zone, and sometimes it wouldn't dip into the zone. It would just, this is why some people miss a trade by 2 pips, 3 pips. Sometimes you just want to get in when it's 2 pips away. so you don't really miss the trade. So this is a really big reward. I think it's 1 to 8 or 1 to 7. Right now I will be in the position, and then just wait it out to see if it's gonna play out. So let's see. Yep, the trade is looking good, really. And at this point, I would be see that was a market gap, lovely market gap. Uh, Obviously, I would have opened this trade during the weekend. I would have left it running because I was in good profit. The trade already did like 1 to 3, 1 to 4. So it's okay to leave a trade like that over the weekend. Especially if there's no crisis going on in your country or in the world. So it's okay to leave the trade over the weekend when the market is stable. So this was a 1 to 8 risk to reward. I just gained a 16% on this trade. So this is my third trade, and back to back, I've been winning. My third trade. I've won 3 trades in a row, and I'm not saying there's not gonna be any losses, but I haven't experienced it yet, and I know the loss is coming. But so far, it's been 3 trades in a row. It's still the month of February, and I've nearly done I've done literally 30% in just uh the month trading just one pair. So I'm just gonna put a note here that was a weekend gap. So I'm gonna put another note that says it's okay to leave your trade open during the weekend, especially if there's no market uncertainties going on during that period in time. Also, you want to make sure you're broken even before the market close for that weekend, or you've locked in some profit at least. So I'll take a screenshot of this, and I'll probably go back to the daily time frame, and I'll remove all these drawings and look for another opportunity in the market. So I will still need the weekly time frame to draw my to if I'm gonna buy, I want to look for another target. So I will go on the weekly to look for another target. But at this point, I will just draw my support and resistance on the daily, and then the weekly, I need a resistance to target the next level where the market is going in case it wants to continue climbing. So that would be my next. That was my target previously, and I would put another target at the top. So if I'm gonna buy, at least I know what my next target would be, and if I'm gonna sell, I have a support level drawn on a daily or weekly time frame. So that's me adjusting the key levels, and now I'm back on the 1 hour time frame looking for an entry. So at this point, I don't know what I'm gonna do. I don't know what the market is gonna do, but there's a market gap over here. Chances are the market would like to close that gap. It does this a lot. Yes, we will see the market closing the gap, and then maybe continuing in the direction was going. But in this case, market has broken the previous structure. So the market was bullish, and it has broken the previous higher low, and I will be looking for a retrace into the supply zone that I just drew, and I will be looking to short this uh, trade if the market should go back into the supply zone. In this case, the market did not go back. The market made uh, a new lower high and lower lows. So now I will look for another supply to trade this pair. So I'll wait for market to just break. Let me just draw a trend to explain exactly what I'm talking about. You can see the market has made a lower high, lower low, lower high, lower low, and then back into the new supply zone, and that will be my new entry point. That supply zone is what I will use to enter the trade. Market structure break, return to that origin, and boom, we have a trade. I think this is 1 to 3 or 1 to 4, I'm not sure, but that will be my trade. So the trade is playing out. It's coming back into the zone. It came back into the zone one, two times already, and I think this trade will come back into the zone again and again. Usually when this is happening, I start to lose patience, and I'm gonna put a note here just to tell you guys what I would do if this is happening. So usually when this happens, I lose patience, and I tend to just close the trade and look for another opportunity. Might have exited. I don't know if that's actually a word, but exit might have exit due to lack of patience. I will have to Google this afterward. I think past tense of exit is exit, not exited, but whatever. So yes, the market actually. Imagine if I had closed this trade, the market would have played out right after I closed the trade. So sometimes that's me correcting my spelling, but I'm still not sure if I'm right or wrong. So sometimes it's very important to be patient, because in this case, if I had closed the trade before it actually played out, I would just be kicking myself for not waiting, and I would have missed out on a great opportunity. So this is me writing. Patience does pay off. Hold your inner spaces and leave the trade alone. Let it play out. There's no reason why you should be watching your trade. The reason why you will be impatient for a trade or make the wrong decision or impulsive decision is if you are actually watching your trade. Get it live. Find something else to do, and you won't be able to make the wrong calls, especially when you're in a trade. Here's a secret: when you're in a trade, your brain is not working well. So you want to leave a trade alone, especially if you had a plan for it. Just leave the trade alone and let it play out. So this was a 1 to 4 risk to reward ratio. I held this trade for just 3 days, and that was the 8% gain. So I think this is the fourth trade I'm winning in a row, fourth or fifth. So the trade was really good. I think this is the period of the COVID pandemic. This is February going into March. So yeah, we can see a lot of volatility going on right now. So I will look for, now that the market is very very bearish. Now I'm looking for another opportunity to sell. That's me drawing another supply zone, and I will just wait for market to return into that zone. But before that, I want to have a target at least. Also, I'm looking for another support level where I will be taking my profit if I'm to sell this trade. So I will be taking this trade right now, even though the market is currently volatile. I will take this trade. The trade doesn't really it's not that enticing because it's in the middle of nowhere. It's not. I would still take this trade and see how it's gonna play out. It's still signature. So yep, I got stopped out on this trade. That's -2%. Finally, I lost the trade. But this is just to show you guys that no matter what your strategy is, it's not gonna win all the time. But what you want is to make sure you're entering when the signature presents itself only. If the signature doesn't present itself for a whole week, don't trade the pair that week. Look for something else, and just keep trading only when it's high probability, because that increases your chance of having a high win rate, and it will be able to cover for your losses. So I've only lost one trade so far. Even with this risk to reward ratio that I'm trading, if I lose 4 trades in a row, I will still be in profit right now because of the high risk to reward. So this is it for gold analysis. I hope you guys learned from it. Thank you so much for watching.